Hello, hello, hello. Happy 2025 and welcome to the 2024 tax season. I hope you guys had an amazing year. I know I did. And I have a lot of great information to share with you. My name is Shantae Hall and I am the owner of SHC Tax Solutions, and I'm also an enroll agent. Before I get into all the updates, I want to first touch on the new standard deductions for 2024. If you are a single taxpayer, the standard deduction is $14,600. If you are over the age of 65, you get an additional $1,950. If you are a married filing joint taxpayer, the base standard amount is $29,200. Each taxpayer over 65 gets an additional $1,550. For married filing separately, you're treated and taxed just like a single taxpayer. $14,600 is the standard deduction, an additional $1,550 if you are over the age of 65. Head of household, $21,900 is the base standard deduction. If you are over the age of 65, you get an additional $1,950. And qualifying survivor spouse, $21,900 with an additional $1,550. Excuse me, I'm sorry. Yeah, sorry, I got that right. $1,550. If you are over the age of 65. Let's talk about some of the things that are going on with the IRS. There continues to be paper processing delays, so obviously electronically filing would be more beneficial to you. So if you're in the position where you can electronically file, or you're amending a return, those can now be electronically filed. So try using electronic filing, because paper processing continues to be delayed. Of course, there are also delays on amended returns or processing amended returns. The IRS is focusing on current tax returns. So they go current, and then the following year, and then the next year, and so forth and so on. Victims of identity theft continues to be a major issue at the IRS. If your identity was compromised or stolen, 9 times out of 10, the IRS has probably assigned a PIN number, a filing PIN number. That PIN number belongs solely to you, and you are required to file your tax return with that PIN number. You cannot file without it. If you try filing your tax return without the PIN after the IRS has assigned a PIN to you, of course, the return will reject back for that very reason. ERC claims continue to be backlogged. If you are someone that filed an ERC claim, all I can say, I don't have much of an update with that. All I can say is just continue to follow up with the IRS, or maybe utilize task services to try to get the process moving forward. But as far as I know, the last update I've received, that they continue to be backlogged with ERC on top of everything else. It's not that it's not a priority, they just have so many other backlogs, such as amended returns, processing paper returns. So ERC is just not taking precedence over those two things I just mentioned. The IRS has issued an initiative to focus on compliance and enforcement, and they are using AI to do it. So AI's focus, and it's not their primary focus or their main focus, but their focus is non-compliant high-income taxpayers. So if you're someone that's considered high-income earner, or you earn over $400,000, you're not in compliance, you haven't filed a tax return, I advise you to get in gear and get those tax returns filed immediately and get into compliance. They're also honing in or focusing on large partnership, and as far as their selection process, they are fine-tuning how they select businesses and individuals for an audit, and they're using AI to help them with that selection, which will be more of an accurate process than what it was before. Mainly the IRS will be using AI technology to assist them with refundable credits such as the Earned Income Tax Credit, the audit selection process, as I mentioned previously, additional revenue increase, and also just overall more accurate audit selection, which is going to increase audit substantially now that they have a technology that they can use to help them hone in on those things and cross-reference. The IRS is also honing in on taxpayers that receive gambling income, but they are not reporting that gambling income. They recently completed a study, and they identified almost 150,000 taxpayers that receive the form W-2G, which is used to report gambling earnings, and they reported over 1.3 billion in gambling earnings over a 3-year period that did not file a tax return or report the gambling income on their tax return. Everyone has a lot of speculation of what's going to happen or what the Trump administration is going to implement as far as taxes are concerned. So let me touch on a few things that are in the making. Some of these have been finalized. One is lowering the corporate tax rate to 20%. It's 15% if the company is US based or the product or service is US made. Child tax credit increased to $5,000. They're going to be removing the SALT cap. They're going to be making the TCJA permanent, and also exempting Social Security benefits, tip, and overtime from federal taxes. Our fingers crossed. And also exempting auto interest. So that's some of the things that the Trump administration is working on implementing. And again, some of these things have already been finalized. There are going to be some TCJA provisions that are going to expire. TCJA is also known as Tax Cut Job Act. So as I mentioned earlier, that very generous standard deduction that we've become accustomed to, that is in the making of expiring and going back to the basic standard deduction that we had before the TCJA was implemented. Personal exemption is, and I mentioned this last year, the personal exemption is coming back. Remember, they took the personal exemption away, which is a set amount that you were able to deduct on your return for each taxpayer that is on the return. That went away, and then they increased the standard deduction. Well, the standard deduction is decreasing and the personal exemption is coming back. The tax rates will increase. The top tax rate will be 39.6%. And again, as I mentioned previously, the SALT cap, removing part of that SALT cap was limiting the amount of home interest you can deduct, car interest. So limiting the interest that was deductible on your tax return, that is set to be removed. And the 2% itemized deduction that was eliminated will be coming back. And that includes unreimbursed employee business expenses. Employee, not self-employed, but employee. The child tax credit is set to go back to $1,000 per child. I've already talked about the standard deduction and what those are for each taxpayer. The standard mileage rate, business mileage rate, is going up to 67 cents per mile. That's for this tax season, the 2024 tax season. Bonus depreciation for you business owners will be decreasing to 60%, down from 80%. 401k contribution limits have increased. For 2024, they are $23,000. If you are over 50, it's $30,500. And let me just say, I say this in every single video. If you are my client, I have said this to you a dozen times if you're not taking advantage of it. As an employee, your retirement account is your best tax shelter. I cannot even begin to fathom the amount of questions I get on how to reduce their tax liability. And it's usually with a taxpayer or individual that is contributing a minimum amount to their retirement account. This is your best tax shelter. So whatever you're contributing, you should be increasing the amount by at least 2% every year. Okay, and then continue to increase until you have reached the max. Out of sight, out of mind. It's the easiest way to step up your contributions without hitting your net pay significantly. Best tax shelter, keep that in mind. Your retirement account is your best tax shelter as an employee. Okay, the child tax credit for 2024 will stay the same, $2,000. The refundable portion has gone up a little bit. $1,700 is the refundable portion, up from $1,600. Earned income tax credit. The max earned income tax credit for 3 children for 2024 is $7,830, and that is up from $7,430. If you receive health insurance through the federal marketplace, then you should be receiving a 1095-A to report the premium and the advance premium on your tax return. If you file your tax return without that 1095, it will reject. There have been some changes for this tax season to the energy tax credit. The energy efficient home tax credit is 30% of the cost of improvements. There is no lifetime limit. The limit per taxpayer is $1,200, and there's $2,000 aggregate limit for qualified heat pumps and water heaters. For electric vehicle credit, the new clean vehicle credit, there's a $7,500 maximum credit. The credit is claimed when placed in service. It has to be the original use. The credit can be transferred for 2024 and later. Of course, you have to fill out the appropriate form, and you can claim the credit when there is mixed use of the vehicle, personal and business. There are some limitations when using the new clean vehicle credit. Of course, AGI always plays a part. If you are a single taxpayer, the adjusted gross income limit is $150,000. If it's used, $75,000. If you're married filing separately, the adjusted gross income is $150,000 for a new vehicle, $75,000 for used. Head of household taxpayer, the adjusted gross income limit is $225,000. If it's a new vehicle, if it's used, it's $112,500. If you are married filing joint, the adjusted gross income limitation is $300,000 for a new vehicle, $150,000 if it's used, and qualifying surviving spouse, $300,000 for a new vehicle, $150,000 if it is used. All of the credit has to be used at the time it's placed in service or nothing. The credit does not carry over. It can be transferred, but it doesn't carry over to the next tax year. So if you don't use all the credit in the current tax year, it goes away. And again, I mentioned that you can use it for a vehicle that is being used for personal and business purposes. To qualify for the new vehicle credit or the electric vehicle credit, the car must be manufactured by a qualified manufacturer. And when you purchase the vehicle, you should have gotten a report or something that reports the specifications of that vehicle. The vehicle must have a gross weight rating less than 14,000 pounds. Again, as I mentioned, that dealer statement is required, so be sure you get that when you make your purchase. The vehicle must be an electric motor with a battery capacity of 7 kilowatt hours or more, and also capable of being recharged from an external electricity source. And the final assembly had to occur in North America. For more information, you can go to fueleconomy.gov/new tax credit. All one word. Again, fueleconomy.gov/new tax credit. You can still claim the credit for a used electric vehicle. To qualify for that, for a used vehicle, you must be the person who bought the vehicle for use and not for resale. And you can't be the original owner. You can't be claimed as a dependent on someone else's tax return. And you cannot have previously claimed another used vehicle credit in the past 3 years. And again, the used electric vehicle must be purchased from a registered dealer. The form that you use to claim the electric vehicle credit has changed a bit. There is a recapture section on the form where you can recapture the credit. My next topic will have a lot of cash-based businesses, feathers in a ruffle, as it should. This has been something the IRS has been trying to deal with for many years, but now they have changed reporting requirements for a 1099-K. If you are a business owner that accepts debit and credit cards, or you use a credit card payment processing device, this definitely applies to you. Before the current tax year, the transaction amount for 1099-Ks was $20,000 and more than 200 transactions. So with the limitations being so high, a lot of people were not receiving 1099-Ks, therefore they weren't reporting that income. So they were excluding that amount of income. Both criteria have to have been met in order for the 1099-K to generate. So even if a business made over the $20,000 limit, if they had less than 200 transactions, they wouldn't receive a 1099-K. So the IRS finally figured this out and they came up with a workaround. Now for the current tax year 2024, the 1099-K has to be generated if the transaction amount is $5,000. No threshold on transactions, so that is significantly less. So that means a ton of people will be receiving a 1099-K. IRS is not playing. Listen, they're like, we know we are missing out on taxes. Yeah. Anyways, so after 2024, which will be the 2025 tax season, it's any dollar amount that's over $2,500 and there is no transaction threshold. 2024, the magic number is $5,000, no threshold on the amount of transaction. For 2025, the dollar amount, or the dollar limit would be $2,500 and there will be no threshold on the amount of transactions. Yeah. So if you are processing credit cards, and for most businesses, it's the most convenient. Most people don't carry around a large amount of cash, so using their debit and credit card is easier. So of course, you want to please your customer, work with your customer, make things convenient for your customer. So you're not going, most people, I don't see people taking away that option of, allowing their clients to use credit card. Be prepared. So with that said, you have the information. Now you just have to make sure that you're preparing for that. Make your estimated tax payments. It will make your life so much easier. And then after the 2025 tax season and beyond, the dollar limit or a dollar threshold will be $600. So everybody's going to be getting a 1099-K, and that just means the CP 2000s and audits, they'll be coming. They'll come knocking at your door. But that's why you guys have me. I'm telling you these things so you can better prepare and you're not stuck with a huge tax bill. And then the next year you're stuck with another tax year. Next thing you know, the IRS has a lien on your property. I am telling you, okay? I am here for you. Come to me. I'm here. The IRS has added a section regarding 1099-K income to allow taxpayer to exclude income that should not be part of the total amount that was reported on the 1099-K. Corporate Transparency Act. I also mentioned this in the update video last year. The Corporate Transparency Act is a federal law that requires most domestic business entities to file reports with FinCEN that identify the business owner. So, and I've also sent out an email. So if you are a small business owner, specifically an LLC, a corporation, or an LLC taxed as a partnership, or an LLC taxed as an S corporation, if you fall in within those entities, you should be filing a FinCEN report. It is not an annual filing. Of course, you must update it when information changes, and this is specifically used to identify the beneficial owner of the business. And this is another attempt to kind of decrease or combat fraud. For filing deadlines and more information, you can go to fincen.gov/BOI. Again, that's fincen.gov/B like boy, O like Oscar, I like igloo. Digital assets. Each year the IRS provides us with updated information on how digital assets will be treated regarding taxation. One thing to keep in mind, digital assets, cryptocurrency, all of that, it's treated as property, not currency. And I'm pretty sure that'll probably change in the near future. The transaction can be treated as ordinary taxes or capital gain taxes. And also you have to determine what your fair market value is and know when and where to report transaction if you buy or sell digital currency. And there is a disclosure on the tax return that asks you if you have purchased or sold digital assets within the tax year. All reporting of digital currency or cryptocurrency digital assets must be in US dollars. Starting 2026, broker houses or brokerages are required to report the basis of digital assets, and that will be updated on the 1040. The tax form that brokerage houses are required to use or will be provided to brokerage houses to report digital assets will be the 1099-DA Delta Alpha. You may have gotten a CP 2000 notice from the IRS or know someone who has gotten a CP 2000 notice. I refer to a CP 2000 notice as a paper audit. So basically, keep in mind that all of the tax form you receive, your 1099s, your W-2s, all of those forms are also provided to the IRS. So the basic forms, the IRS, when you file your return, the IRS system will do a cross match to make sure the income that they have on file is the same income that you're reporting on your tax return. And sometimes there is a lag. You may not receive this notice for a year after you receive your tax return, but 9 times out of 10, if you exclude income from your tax return, the system will generate a CP 2000 notice and send that to you. A lot of times the IRS will automatically adjust the return, or they'll give you the option to confirm if the information that they're inquiring about is legitimate, or if it even should have been on the tax return. But just keep that in mind. The forms that you receive, the IRS has those on file, and they're checking. The system is doing an automatic check, a cross check. And that's the same goes with dependent. If you're claiming a dependent on your tax return that someone else has claimed, obviously the return won't even go through. Everything on your tax return should be substantiated, either by the tax form itself, or if you are taking deductions, make sure that you are having a receipt, or you have a receipt to support everything you're claiming. Especially if you are a business owner, you should have receipts to substantiate every single thing that you're deducting on that business tax return. No excuses, no exceptions. The same rule applies when you're itemizing your deduction on the Schedule A. You should have receipts to substantiate everything that is on that Schedule A, no exception. If you follow those basic rules, if you can support everything that's on your return, you shouldn't have a problem when it comes to an audit. Just keep this in mind. 2 words that I'm going to provide for you before I close out this video: ordinary and necessary. The IRS says, especially when you are a business owner deducting certain expenses, if the expense that you're deducting is ordinary for your industry or for your type of business and necessary for you to conduct your business and for you to make money, it is a deductible expense. Ordinary and necessary, and you have the receipt to back it up, You should not have an issue. It's as simple as that. That's all I have for you guys. I hope you enjoyed the video, and hopefully it wasn't too painful. I tried to summarize everything and throw in the items that I thought were the most important. Again, don't forget to like this video, give a big thumbs up. It takes time and effort for me to record these videos and edit the video. So hopefully it was informative. Hopefully you got something out of it, and be sure to share it and join the family, because I am going to change the format. You'll get one tax update video, but the rest I will be updating as shorts, so it will make my job a lot easier. Thank you for listening. Thank you for watching, and I hope you have a blessed 2025. Bye bye now.